Hi guys, KP this side from InvestorWise. Wish you all a happy Diwali, and we just hope the uh, the beauty of equity markets that we witnessed in last 1 year, it stays the same in times to come. And I've been getting a lot of messages regarding the moderate trades. If you remember, last year we have recommended around 4 or 5 scripts during Diwali. I've been doing it for many years now, where I have been giving you moderate trades, and this year has to be no different. I got a lot of messages from my clients plus the followers of InvestorWise asking me to suggest certain scripts. This year I just thought I would make it a little different. Rather than just giving you the name of the scripts with their target price, I thought I'll give you some fundamentals also, because since markets are at all-time high, so there has to be some solid reason why I would ask you to pick on certain scripts. Before we start with the video, we saw Nifty doing its all-time high at 18,650 mark. From there we saw some correction, which was around 700 to 800 points of correction we have witnessed in Nifty, which is almost like a 5% correction we have seen. And have been getting a lot of messages asking me, is this a correction or a crash? And I always say this, and I would repeat it one more time: a crash is something which does not usually happens in the market for no rhymes or reasons. There is a solid reason which will only cause a crash in the market. Rest everything that happens is a small correction. As an equity analyst, I feel corrections are very important part of the markets, and for two reasons. Number one, you understand that there is no blind bull phase in the market. It's not that people are picking up on anything and everything, and it's a sign of consolidation in the market. It's a sign of rational investors being there in the market, and any consolidation in the market is healthy, and it is only going to pull up the markets more. Yes, it is no point speculating how long this correction is going to happen. If you see, globally things are looking pretty good. The Fed policy which came yesterday, they have kept the interest rates intact. In fact, if you ask me, I personally don't see the Fed policy where they will be increasing the interest rates or cutting on to the quantitative easing program, which has been running for more than a decade now. I feel this has already been factored in to the markets. And I have always been telling this, where the interest rates are as low as 0.25%. I personally don't feel a small hike in the interest rates will bring a rapid or a drastic change in the kind of investments that have been flowing into Indian economy, or more so specifically the Indian equity markets. So I personally don't feel there is any reason for markets to crash, and the irony is, crash is something which cannot be predicted. Crash is something which cannot be anticipated. This is very stupid on part of a lot of people who have been shouting at the top of their voice that a crash should happen now. When you ask them valid reasons for it, they don't have any specific reasons for it. All they say is, since markets are at all-time high, so a crash is gonna come. But that is, again, I feel, a kind of speculation. That's it, nothing more than that. Until and unless you don't have a justification for why markets should correct, you come up with some solid reason why markets should correct, I don't feel there is any reason to panic. Yes, I have been telling this many a times in the past in my vlogs, and I repeat it every time market shows you a new high. All you got to do is be more pragmatic, be more cautious about your stock picking. That's it. Now, one thing is for sure, from here on, buying any kind of a mid cap or a small cap stock without looking into its corporate governance, without looking into its business model, without looking into its fundamentals, that is not going to happen. There is no easy money now in the market. You will have to work hard for it. But if I work hard, and if I still am able to get a return of 20% plus in equity markets, I would be more than happy, because no other asset class is capable of giving you that much returns. Plus the ease of liquidity, the utmost level of transparency which is there in equity markets is best when compared to any other asset class. Because see, what happens is when you buy any other product or any other financial asset, you will always have a second thought in your mind: did I pay something more? But in equity markets, everything is so transparent that the prices are determined by purely by demand and supply. And once I decide I have to put my money into a particular script on a given day, I'm very confident about the price I am paying, and probably I'm willing to pay that price for the stock. So there is no regret. If it goes down in value, it's okay, we will average out. If you trust the company, there is no point worrying if there is a 10 or 15 or 20% correction in the stock. Okay, so I have always been maintaining this fundamental research, deep down analysis of stocks, analysis of the sector, analysis of the overall economy, the industry to which a stock belongs. All this is to be done thoroughly. If you have been associated with InvestorWise, you know I have been doing it on your behalf, so you can rest assured about your investments. Apart from that, I think there is no reason why you would doubt this asset class. You can doubt your luck, you can doubt your advisor, but there is no point doubting this beautiful asset class. So basically, I have four scripts which I want to suggest you today, with some background and understanding about the stocks that I will share with you. Plus I have two bonus picks at the end of this video. So the first stock, guys, is Mahanagar Gas Limited, and this stock is currently trading at around 1007 with a face value of rupees 10. The kind of fundamentals this stock has, I personally am very much bullish on it from its current price. It was trading, if I just give you small numbers, we are today on 4th of November, and this stock has done a price of 1206 on 15th of September. So which means there has been a correction of close to 200 rupees in last 1.5 months. No specific reasons I could see for that. On 17th of September 2021, the stock has declared a dividend of rupees 14 per share. Its 52-week high is 1285, which means if I compare it, if I compare the current market price with the 52-week high price, the stock is trading at a discount of 22%. A stock is having a book value of 327, trading at a price to book value of 3 times, which makes it quite cheap. And if you see, the FII investments in this script is close to 30%, and DII is holding close to 28%, which means almost 60% is being held by FII and DII. And I've always told you this, FII and DII stakes matter a lot for me, because that gives you a sense of satisfaction and some level of confidence that if they are putting in their money, they probably see something promising in this stock. Apart from that, promoters are holding 32.5% in the company, with nothing being pledged as on date, which again makes you understand that there is a very small percentage of holding by the public. Most of it is being held by promoters or the institutional investors. The PE ratio of the stock is 12 times, which make it very comfortable valuation wise. And their numbers have been very good. With the September quarter numbers have been very good. The second quarter numbers have been declared for most of the companies now, and they have registered a total net profit of around 204 crores as against 144 crores if I do a comparison on year basis. So this is my first pick, guys, which I feel is a very good script. You can definitely hold it for a short-term target of 1125, 1150 mark. That looks very much possible. Yes, long-term I feel it will reiterate back to its 1285 levels. But I personally feel once it crosses the 1125, 1150 mark, if you are a short-term investor, it's better that you book your profits. That is what I would suggest. My next pick, guys, is Motilal Oswal, which is currently trading around 918. We all know Motilal Oswal is involved in various kinds of financial services, including the brokerage services. The PMS services have been the biggest across India for Motilal Oswal. and the stock is currently trading at 918 with its 52-week high of 1188. For a long time now, if I remember correctly, for last 2 to 3 months, the stock has been trying to consolidate in this range of 850 to 950 levels, and it is currently trading at a 23% discount if you compare it with its 52-week high value. Its book value is close to 301 with a price to book value ratio of again 3.05 times, which makes it very, very comfortable if you do a price to book value analysis. The P ratio being just 8.77 times, whereas the sector P ratio is close to 56 times. If you just compare it with a company like Angel Broking, you would have seen Angel Broking from the time it has listed has been trading now at a very, very high premium. Probably it's around like 4.5 times it is trading compared to its listing price. So this stock looks very, very promising to me at its current valuation, looks very cheap to me at its current value. Not just that, if you see, they have posted the highest net profit numbers in the entire history of the company, with its September 21 profits being 550 crores. Yes, you heard me correct. It is 550 crores, whereas if I look at the June 21 number, that is the last quarter, it was around 220 crores net profit. And if I do the year-on-year comparison, September 2020, they had done 235 crores of profit, whereas this year they have done 550 crores of profit, which is almost like more than double. You can almost say like it is two times or maybe 2.5 times, you can say. So this is looking fantabulous at its current valuation. A lot of consolidation has happened in the stock at its current value. I would say that the stock can easily move in the range of 1025 to 1075. Again, if you are a long-term investor, you can hold it for levels of 1200 plus. But I still would say levels of 1025 to 1075 is where you should plan to book your profits and wait for some corrections again to re-enter into the stock. This is what I would suggest. My third pick is Vedanta. My personal clients would know how much I love this stock. We have made hefty profits in this stock, both for our S2T2 and FST clients. This stock is now trading at 310. We know the metal sector has been shining for the last 4 to 6 months now, but I still feel Vedanta has a lot of potential left. Currently trading at 310 with a 52-week high of 386. The stock is trading at almost a discount of 20%. This 386 was done just a couple of weeks back. The book value of the stock is very, very solid, which is 208 rupees, which means the stock is just trading at a price to book value ratio of 1.5 times. With this kind of the valuations which we have in the market as on date, finding a script with a book price to book value ratio of 1.5 times is very, very difficult. I mean, where all other parameters for the stock is a thumbs up, in those kind of circumstances, you won't find stocks with a price to book value of less than 2. And getting a stock like Vedanta at such cheap valuation is really good. One big reason why Vedanta saw us a free fall in its price was for the fact that they had a wild thought of delisting its shares. As of now the company is saying they would delist their ADR, but they would continue having its share listed on the Indian exchange, which removes all the doubts in your mind about this company. It's trading at a PE ratio of just 6 times. That's very, very less. And the sector PE, if you see for other stocks, has been on an average 11.33 times, which means it's almost trading at half the PE ratio compared to its peer companies. And its return on equity is also solid, which is around 18.5%. The numbers have been stupendous. Like for any other metal stock this year, the numbers have been stupendous. One big reason for metal sector shining in India is because China has been trying to control the overall production of metal companies in China, as a result of which the demand for metal products, different minerals, if you see the aluminium or steel or iron ore, these products have seen great surge in demand as far as the Indian companies are concerned. So I feel Vedanta at its current value of 310, long term is stupendous, guys. You can hold it for as much as 400, but I see the first resistance somewhere coming between the range of 365 to 385. So my first target is 360, 365. Then it can, if you can hold on to it without thinking much about the profit booking thing, if you can hold on to it with patience, then I think 400 is the next target for this script. Another good thing about Vedanta is that it pays, it's a good dividend paying stock. They have paid 18.5 rupees of dividend, 18.5 rupees of dividend recently. So you are earning both the capital appreciation plus the dividends from this kind of a script. I'm very, very bullish on it. Apart from Vedanta, I won't mind if somebody likes investing in Jindal Steel. They have also produced stupendous numbers, and if a high value script has to be picked up, hands down, Tata Steel is the best for me. The next stock, guys, is Ipka Labs. That's a pharma company. And we have very much heard its name in the pharmaceutical industry. It's currently trading at a price of 2125. Its 52-week high is 2766, and it is trading at a discount of 23% from its 52-week high. The numbers have been stupendous for this company again. The FII is holding 19% in Ipka Labs, and the DII is holding close to 26%, which is clearly suggesting that around 45% of its total shares are being held by the institutional investors. The numbers have grown very, very positively for this company. If I do a 5-year analysis from 2017 to 2021, that's a 4 years end to end. If we see, the numbers have grown big time. Like its EPS has grown from 15 to 90. Yes, rupees 15 EPS in 2017 has become rupees 90 EPS now. Their return on equity has grown from 8 to 24. What else an equity investor asks for? The first thing that as an equity investor I would see is what is the return that the company is able to generate for its shareholders, and the return on equity has grown 3 times for this company. The net profit figures have grown from 200 crores to almost 1150 crores. That is more than like almost, you can say, 6 times the numbers have grown. Numbers are very, very healthy for this company. It is not at all trading at a very expensive valuation. It's one of the best scripts in the pharma sector. Apart from this, again, I would suggest if you have the patience to hold on to stocks, then stocks like Alembic Pharma, Aurobindo Pharma, these are also trading very cheap now. But they will test your patience. If you can hold on to them, there is a huge potential for upside in these companies. And trust me, pharma companies in India have a very promising future. The way we export our medicines or the raw materials to different countries, including US and some of the European countries, we dominate those markets, and accordingly the pharma sector has huge potential. If you see, when we were hit by the COVID, that time pharma sector, once the recovery started happening, IT and pharma were the 2 sectors which have flourished the best at that point of time. But after that, it became a little lackluster, and I feel this is again the right time where you start picking up some of the pharma stocks. But I personally like Ipka Labs a lot. So these are the 4 scripts, guys. I just recap whatever I suggested. Mahanagar Gas at around 1007 for a target of 1125, 1150. Motilal Oswal at a price of around 918 with a target of 1025 and eventually 1075. Vedanta at its current price of 310 with a target of 360, and then the next target being 400. Ipka Labs at a price of 2125 with the first target of 2275, and then it can very much go past 2300. If it can sustain above those levels, then 2400, 2450 also looks possible. If you're a short-term investor and you believe in booking profits, which I always suggest, profit booking is very, very important in this market. Or you can say the kind of people who come to me, they are all they all come to me with one simple agenda, that they want somebody who can give them good profits in this market. So when we are giving services or when we are suggesting stocks, we have to be very, very performance oriented, and we have to make our clients book profits, because only what you book is yours. Rest unrealized profits is only a feel good factor, and we have become very, very news sensitive. And it's not just we as a country, but we as investors have become news sensitive. One bad news comes from anywhere across the globe, no matter how insignificant that news is, a small reaction always happens, and that might cause drastic corrections in the stock. So we don't want to leave things by chance. It's better that if you pick up things at the right price, then it's always good to book profits. One thing you would have noticed is that all the 4 scripts which I recommended you are trading at close to 20 to 25% discount, which means, as I always say, no matter what the index value is, a stock specific bet has to be done by you all the time. And the whole idea of picking up these 4 stocks was that they're fundamentally very good. They have been trading at close to 20 to 25% discount to its 52-week high values, and still, with markets being at all-time high, if I can pick up stocks which are fundamentally good and are still trading at a discount, those are very good entry points for you. Apart from that, I'm giving you two bonus scripts as I promised. One is Triton Valves. Probably you wouldn't have even heard about this name, but we have been covering this stock for a long number of years now. Triton, Triton, Triton Valves. It's an auto ancillary company. The stock is currently trading at a very good discount of 33.5% compared to its 52-week high. The stock current market price is 1174, with its 52-week high price being 1763. Book value is amazing, guys. It's around 753 for this stock, and it has a price to book value ratio of 1.56. Recently declared its results. To be very honest, results were not good. They in fact posted losses in this quarter, but I think that is not going to bring in a lot of dent for the company, and whatever had to happen, a price reaction had to happen, has already happened in this script. And the good thing about this script is it is only listed on BSE, so you see that the volumes are very less trading wise. Its equity share capital is just 1 crore. Can you believe me on that? Generally what happens is, if you can grab this stock at lower prices, one fine day some buying comes in and you will see 125 rupees of upside value. So at investor wise, we have this tendency to pick up stocks which are less known in the industry, have a small share capital, mostly they are listed only on BSE, and so the price action is superb. Like sometimes what happens is, you might not see any movement in the script for 1 month, and then suddenly sharp 20%, 25% upside can happen in a stock in no time. So Triton Valves is one company which is a bonus script from my end. And the second one is CESC. The stock went under the stock split, now trading at around 88.7 rupees. For people who are looking for penny stocks, I suggest for you, penny stock is something which is less known to the industry, or the stock is not commanding a good price. But I would say, if you have to buy a penny stock where you don't know much about the company, it's always better to pick up things which are still trading cheap and they have a lot of value left in them. So CESC is one such script. You can easily buy it at around 88.7 with an upside target of 110, 115. I would suggest anything above 105, you should be comfortable booking your profits, because it's a small value stock, so you can pick up in good quantity, and I feel it can give you good upside. The fundamentals of the company are very good. So these are the 6 scripts, guys, I suggest. There are many more scripts, but I don't want to keep bombarding more and more scripts to you, making you confused that what should be bought and what should be left behind. So the suggestion is, a lot of rumors keep spreading in the market. A lot of misinformation is there in the market. You have to apply your brains. There's a lot of this question being asked to me: is this the right time to enter the market? And this is one question which I hate the most when people ask me, because okay, tell me one thing. If you feel this is not the right time to enter the market, then what is the right time to enter the market? And okay, tell me one thing. If you enter the market at a given point of time, and from there the Nifty again goes 1,000, 1,500 points up, would you again take out your money from the market and then sit on your money? I mean, I don't understand this kind of a logic. Why people say this, that is this good time to enter the market? For an asset class like crypto, where there is no logic, there is no real asset coming into your hands. You still see India as a country has put in so much money into the asset class. I don't even like calling it an asset class, because there is no logic for deriving the price of that crypto being as an asset. But still people are comfortable putting their money over there, which is a pure gambling, nothing else. If I ask you, why would you invest in Bitcoin? There is no reason. Just that because it has gone up so much in the last few years, so I want to buy it. So you saw this, now some are not coming as cryptos, they're coming as token. And Squid Games, if you remember, based on that they have come up with a token. People were investing like crazy in it, and suddenly from a very high value it went down to zero, and people losing a lot of their money. So be wise, guys. The only recognized names in the asset classes are real estate, gold, equity, mutual funds, which is again a subset of equity itself, or you can go for debt instruments like bonds, or you can also trade in e-gold. These are the asset classes, guys. Among them, the asset which gives you the highest possible return is equity, but you have to be very, 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 what do I say, strategic and pragmatic in your planning. It's not like सही समय कब ऐसा बताइए ना, अभी काम करना चाहिए क्या मार्केट में. Be in the market, stay in the market. It's okay. If you feel the markets are going beyond your comfort zone as far as the higher values are concerned, create more liquidity. Do less allocation to the equity shares. But it is not like I'll come and go out of this market. People who come and go out of this market at the end of the day are left with nothing in their hand. You got to stay in this market to see the magic of it. Okay, I hope a lot of gyan I have given. And I remember the last video I did was a couple of months back, but the good news is whatever was recommended apart from Shyam Metallics, everything has done stupendous returns. And the whole idea is not to focus on quantity of videos, and I always try to focus on quality. And honestly speaking, I've been very busy with my schedules off lately, and that is why I thought this Diwali we are going to make a video and not just share the name of the scripts. Giving you logics, giving you fundamentals of the stock, decoding the fundamentals is important, because that will give you more confidence when you're putting your money into these scripts. Moreover, guys, I just wanted to thank all of you who have been following me or who have been associated with me in one or the other way. It's because of your support and your trust in our services we have been able to do well, and we continue to work very, very hard for our clients' money. We promise you everything that we suggest you is not at all biased. It is all the hard work and research which I personally put in, and based on that only we recommend you something. So we always had and we always will have one motto, and that is we always believe that it's not the client money, it's our money which we are putting in. So every time you make profits and I get the adrenaline rush, and every time you lose money I feel the stress and the pain at the same time. So we just hope we can continue with the good work, and if we work hard, I am sure that will be noticed by clients, and that will bring in good results for us. And I'm very sure in times to come, 2, 3, 4 years down the line, I will be able to convince more and more people that equity is a beautiful asset class, provided you do it with a sensible head and you're not reckless and irresponsible in your investment decisions. Then this is really the best bet you can have as far as the financial assets are concerned in the market. Of all the choices, this has to be the best possible way to make money. Obviously, I always say this, you got to learn how to diversify your money. You can't put every single penny of yours into equity. Insurance is a must. Term insurance policy nowadays is very important. A mediclaim with a good value is very important, not just for yourself but for your parents, your spouse, your children, everybody. Small deposits in mutual funds, SIPs kind of a thing, or debt instruments is also important. Some amount of gold also can be purchased. All these things together make up a basket of your portfolio. But as far as equity investments are concerned, don't worry about it. Just stay invested, buy right, sit tight is the motto. And before investing, think 2 times. But once you have invested, don't worry about it, because you would have done your research before buying something. Then you need to believe your research. Chalo, bye bye guys. Stay well, stay bullish. God bless all of you. Thanks a lot, guys.